Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus will be on Waaree Renewable Technologies Q1 earnings, the solar EPC subsidiary of Waaree Group that's announced its June quarterly performance. And what we've seen is that there is a 207% increase in the company's profitability that's coming at 86 odd crore rupees. Now what we've also seen is that the revenues from operations have also come in at 603 odd crore rupees. That's also seen a substantial jump, a year-on-year jump of 155 odd percent. The company's also reported an EBITDA of 117 odd crore rupees for the quarter, marking a significant jump from 41 odd crore rupees reported in Q1 of FY25 as well. Now, of course, we've been seeing the share prices of Waaree Renewables over the last 3 odd trading sessions have already gone up 30% right ahead of the Q1 earnings in anticipation of the earnings. And we'll now find out from the top management as to what has been the key contributing factor behind this strong set of our performance and whether this performance can be replicated for the rest of the financial year as well. Mr. Manmohan Sharma, who's the CFO of Waaree Renewable Technologies, is now joining in on the program with us. Warm welcome to you, sir, and good afternoon to you. Many congratulations for kickstarting Q1 FY25 on a very strong note. Do detail for us, sir, what do you find out?
Thank you, Sakshi, for giving us an opportunity to meet our stakeholder through your platform. Yeah, please.
It's our pleasure, sir, to have you with us. Tell us, sir, what have been the top 2 or 3 key contributing factors in which we have seen, your profitability, your top line, your EBITDA performance, see a stellar growth on a year-on-year basis.
So I'll highlight 2, 3 key contributor. Like we are executing large scale of projects actually, with the budgeted tight budgetary control, tight financial monitoring, and monitoring of these projects on a real time basis. So this provide us an opportunity to reduce or minimize our cost and higher our margins.
Sir, tell me, when it comes to the revenue mix, which is the segment of yours that continues to drive the revenues for you, and how do you see the revenue mix panning out?
See, mostly if you see that it is coming from large utility scale and C&I. So these are the two main like drivers for the all the renewable sector because they have a capability to have 1 gigawatt, 2 gigawatt kind of projects.
Okay. Sir, you have EPC, IPP as well as third-party projects as well. Can you detail for us in terms of the percentage of revenue contribution from each?
See, our total, if you see our total revenue, the majority is comes from the EPC. So balance around
That's 90%, right, sir? That's almost
yeah,
90.
yeah,
Huh.
more than 90% I would say. And
Okay.
but we have another two revenue stream which are very interesting actually. Like we are setting up the IPP projects whenever we are conserving cash which is available to us, we are putting as an investment to have our like continuous revenue stream going forward. Plus we have O&M business also that is also contributor. So whatever projects we are executing during the current financial year and likely to execute going forward also that will contribute to the O&M.
Okay. So help us understand now, since your top line, your bottom line, your EBITDA performance has grown substantially over the last year, the question then comes is, will this kind of a growth be sustainable for the rest of the financial year? Will you be able to replicate this kind of a move?
So if you see that our performance over the last 12 to 15 quarters, maybe we are continuous profitable company. Number one. Number two, like whatever we did in March 24, 876 crores of revenue, we did 1597 March 25. So for the quarter also, we have done almost half, one third of the last year revenue. So looking at our order book of 3.1 gigawatt, that is to be executed over next 12 to 15 months. So the revenue will come in next few quarters.
Okay. Sir, help us now understand when it comes to the margin of yours. Can you break down the margin movement in this quarter? What has contributed to the margins?
So we are purely in EPC. So all the most of its margin has derived from the EPC contract, and plus whatever the IPP revenue is around 9 crore or maybe 5 6 crore of O&M. So these are the another this revenue which are contributed to our margin.
Okay, and what is the margin band you are looking at for FY26? Can you give us a guidance on margin?
See, as of now, that this order book is there for 3.15, and our revenue is likely to be in the range of like per megawatt. If I take is between 1.1 to 1.2. So that is the total order book which is to be executed, and the margin will remain like maybe in the range. Whatever we are not giving any kind of guidance, but we expect that it should remain in the range of 15%.
Okay, around 15% is what you are comfortable with, and you will be able to
So
post.
whatever we are delivering is the bonus for us actually.
Okay,
Next.
sir, then you're talking about the current size of your order book. Tell me how much of it is executable within FY26.
So it is difficult to break contract by contract how much it will contribute to this year, may spill over the next quarter. But whatever we are saying is like it is to be executed over 12 to 15. Our we are also want to execute it as fast as it is possible actually.
Yes, absolutely. Can you help us understand a little bit on the split geographically for the orders that you're getting? Which are the geographies you're getting most of the orders from?
See, geographically, if also Rajasthan, Andhra Pradesh is also we are getting a lot of orders from Andhra Pradesh. Rajasthan is also major contributor. Then apart from that, all state like Gujarat, MP, and Maharashtra is there. Apart from
Okay.
that, what we are doing, like we are trying to build some land and PE connectivity so that this can be offered as a bundle where we will have opportunity to get EPC order out of it.
Okay. Help us understand, sir, when it comes to the EPC, solar EPC project pipeline for the rest of the financial year, what is the kind of pipeline we can expect?
See, as of now, we have 25 gigawatt worth of pipeline. And if you see the government initiative, they are also coming up in big way in the tenders. Around 5 to 6 gigawatt is a tender which are live as of now, which is
Okay.
to be bid. And we are also actively participating in all the tenders. Plus, the remaining is from the C&I and utility scale. These are the two area where they are also coming in big way.
Any idea of, sir, how much of the 5 to 6 gigawatts of the tenders that are coming in, what are you aiming at to receive?
It is difficult actually. We are. It is difficult to say anything how much we will get out of it.
Yes.
But if it suits our risk reward metrics, then definitely we'll do. Otherwise, we may not
So,
do.
maximum of your orders, are they from government right now? Can you tell us between government and private, what is the split of the orders?
So megawatt term, it's like 15 to 20%. The amount wise is also 25 to 30%.
Okay. Sir, can you also tell me about, going forward from here, what is the kind of expectation that you will have in terms of, increasing your geographical presence from where you are at currently? Do you want to expand in other areas also? Is international also on your pipeline, sir?
Definitely, because if you see that we have announced that non-binding agreement of development of 100 megawatt of solar project in Vietnam. So, but though it's a non-binding as of now, there is no firm commitment, but it is likely to get in. We expect that it will get converted into uh, next few quarters. So these are, and wherever we are seeing any opportunity, we are actively participating.
Okay. Sir, on your current order book, the current capacities that you have, are they sufficient to fulfill the order book that you have, or are you looking to further expand your capacity also? Could you hear me, Mr.
Yeah,
Sharma?
definitely much we
Yeah.
can execute at a faster speed. Yeah, sorry. Yeah, please.
Sorry, I missed your point there. So there was some connection issue. Could you tell me, will the current capacity that you have be enough to fulfill the orders that you already have on the books? Are you looking at any expansion?
So we are the EPC player. Our capacity is the manpower and the strong execution team that is required for execution. So in terms of capital expenditure, we don't need anything. We are the execution, and we have a strong execution team, and SCM means supply chain team that source everything for us, and we are there to execute.
Okay. Sir, can you also help me understand beyond solar, are you looking at green hydrogen? Are you looking at data centers? What is the kind of other kind of areas you are foraying into?
So we are the EPC player. So whatever opportunity comes from BESS or maybe green hydrogen, as far as the EPC work is concerned, we are actively looking actually.
Okay. Can you also tell me, sir, what is the potential of revenue contribution from solar and what will be the potential contribution from other renewable energy that you are expecting to scale?
So as far as like as of now, we have 40 megawatt hours of contract of BESS that is we are executing. Apart from that, we are actively looking because the data center requirement where you have the green power requirement and data center EPC work, which is also there on our radar. So as and when we get opportunity, we'll look into that.
Will there be any fundraise required from your end, sir, at all this year?
Uh, there is no as such capital expenditure required for execution of BPC work. We are whatever capital expenditure required for the only for the IPP development, which we are doing gradually. And apart from that, we are using non-fund based working capital limit. So that is required for the bank guarantee or maybe day-to-day operations.
What is the debt on your book, sir?
Sorry, I missed out.
What is the debt on your book, sir, and are you comfortable with the
Yeah.
debt to equity ratio?
So we are very debt light company. We don't have any kind of debt. We are just around 25, 26 crore of debt. That is for the IPP. So we are not taking any debt as of now.
Okay, okay, got that. So when we talk to you about your annualized revenues, of the projections that you can share with us on an annualized basis, there was a target of 1,000 odd crore rupees. I want to understand, can this be a recurring factor and how soon can we see that?
So this you are asked. I just missed out what you were actually.
Annual revenue of 1,000 odd crore rupees. Do you think this can be a recurring factor? Can we look at a top line annual revenue of over 1,000 crores from you?
Yeah. So if you see that last year itself, we have about more than 1597 crore, which is much higher than the 1,000 crore number. And this year, if you see, we have only achieved one third of what we did in March 2025. So these are all achievable. Like 1,000 definitely will be achievable because uh,
Upgrade that kind of an outlook that you have? Would you want to make this higher as your own vision on an annualized basis, sir?
so definitely like whatever the order book we have in hand, we have 9 months left for this current financial year. So definitely we will be booking revenue going forward.
So you're being conservative right now with your estimates, sir, right now, because you're already completing one third right now.
So yes, definitely. So you can yourself calculate that we have already done. So with the revenue of 3.1 gigawatt, 15 gigawatt of order book, definitely revenue with the rate it will come definitely.
Okay, all the very best to you. Thank you so much, sir, for being with us on the program and helping us understand the key growth drivers. I wish you all the very best. Stellar set of numbers yet again. Congratulations to you.
Thank you, Sakshi ji. Thank you.
Thank you. All right, viewers, we'll wrap it up on that note. As far as Waaree Renewable Technologies is concerned, a strong top line, a strong bottom line, as well as margins expansion. The 15% range of margins is what the management is really looking at. Already about a 1,500 crore rupees of an annualized revenue can be seen, and there is a possibility that the company will be able to supersede that previous revenue on an annualized basis on FY25 vis-a-vis what could be coming in FY26 as well. Thank you so much for being with us. I will continue to get you the market coverage on the other side at the closing edition at 3 p.m. So stay tuned for that.
No, we're not planning on doing anything. We're very concerned. He's doing a little renovation for 2.5